When Virgin Orbit was founded back in 2017, I thought the concept behind the company was a great idea. Just take a 747 plane, modify it slightly to carry a rocket, and now you have a reusable first stage that can carry a rocket up to 33,000 feet for a minimal cost. No need to worry about perfecting propulsive landings, helicopter catches, ocean barges, or fishing rockets out of the water. Any efforts towards making space access cheaper and reusable was welcome in my books. Also remember that the Falcon 9 first stage was only reused for the first time in 2017, and the space industry looked to be in far worse shape than it is today. The space shuttle had been long retired, and there was a very real sense of stagnation in launch as well as the overall space industry. Virgin Orbit delivered its first commercial payload to orbit in June 2021, and Richard Branson's Virgin Group brought the company to public markets just a few months later, still riding high on their success. At the time, the company was valued at $3.7 billion, and the company expected to grow its launch cadence to 18 per year by 2023. However, it seems the company has gone off the rails since that time. With only 2 successful launches in 2022 and the inaugural launch from the United Kingdom failing earlier this year, the cash burn has continued to pile up. They do have 6 more launches on the schedule for this year, but they still continue to investigate the anomaly leading to this most recent launch failure, and you have to wonder whether tripling their launch cadence from last year is really in the cards at this point. The valuation of this company has plummeted at this point from $3.7 billion in 2021 to just $451 million today. In addition, billionaire founder Richard Branson has recently made a move which calls into question his confidence in his company and makes me even more worried for their future. So let's take a look at the finances of Virgin Orbit and see whether it's worth investing in this embattled space company at a fraction of its former value, or potentially making money by shorting the stock if we think bankruptcy is in the cards. Hey guys, it's Dave here. Thanks for watching as always. I'm sure as you saw in the introduction, today I'm going to be talking about Virgin Orbit. It's a company that looks to me like it's in a lot of trouble. It's had a really tough time on the stock markets basically since it went public. And this latest move from Richard Branson has me pretty unhappy with the management of the company, and we're going to go into that shortly. By the way, though, I do hope if you're new here that by the end of this video, I'll earn your subscription, especially if you're interested in investing and investing in space stocks as well. Also appreciate every like you send my way to help out with the YouTube algorithm, and we have a Discord server, link down below in the description, where we can talk more about investing and do a lot of fun investing related activities and stuff like that. And by the way, as I've said in previous videos, I don't have a philosophical problem with shorting a stock or basically betting on them going down. As far as I'm concerned, in the stock market, all's fair. Us retail investors need to do whatever we can to make money. The big guys already have enough advantages, and they won't hesitate to short any company they think isn't doing well. So as long as we're not trying to deliberately manipulate a stock price and cause harm, financial harm to other people, I don't really see a big deal. If I think a company is poorly run, if I think it's going to be set up to fail, and I can make money off of them losing, then so be it, you know. Obviously, I hope that the space industry as a whole moves forward and continues to progress, but we're all out here to invest and make money at the end of the day, and I'm definitely not the size of channel where I could boast that I can, potentially move the stock myself if I, tell people that I think they should sell or anything like that. So let's take a look at the stock. If I think it's worth buying at these all-time lows, if I think it's worth shorting and the potential for it to completely go bankrupt, let's dive into what's going on with Virgin Orbit and why I think this company could be in serious trouble. First of all, here's the stock chart from when they went public back in late 2021, I believe it was. And obviously, it's been a rough ride all the way through for Virgin Orbit. Maybe a little bit of a brief peak here, but then just a lot of pain for retail shareholders. So anyone who ended up buying this company at the peaks or basically at any point before now, you have my sympathies, because we're basically at all-time lows at this point. So if you own the company, there's really no way that you've made money if you're on the long side of the trade. So on to the big news of the day. This is from an SEC filing that Virgin Orbit recently filed, where they basically raised some more money from billionaire Richard Branson and his Virgin Group, which on the face of it should sound like a good thing, right? Like if they can raise more capital in this tough times, shouldn't we be happy about that? But let's look a little bit more closely here at what's going on. There's a lot of legalese speak in here, and I know there's a lot of text to read, so I'm just highlighting certain points. It can be a little confusing to read, but I'm trying to break it down for you guys. So basically, Virgin Orbit issued a convertible note in the amount of $5 million. So basically what this means is they're getting $5 million from Richard Branson and his company in exchange for a note that can be converted into shares in the company. So, you know, Richard Branson, billionaire who was heavily involved in founding this company, invested $5 million into it. Sounds good. Well, it's a little odd, right? Because if this is a rocket company in financial trouble, what's $5 million going to do? Like maybe a week or two of more runway? Like it's not much. It's so little. And if he was going to be putting more into it, because I definitely think they're going to need more money, why would he do 5 and then another, 50 later on? Surely he would just do 55 or whatever, however many $1 million he feels he needs to put into it. So this is already kind of raising some red flags to me. Like, why just $5 million with a company that's in a rough financial situation that we're going to go into shortly? There's obviously a little more to this, though, beyond the tax rate if it defaults of 12% or 16%, which is quite high. Let's look at this. So, in connection with this convertible note, the company and the guarantors granted a first priority security interest on substantially all of their respective assets, including all aircraft, aircraft engines, including spare aircraft parts and related assets. So that's a little interesting. Basically, they're saying, okay, you got first dibs on all our stuff of value if something goes wrong. Upon the occurrence and continuation of an event of default, so basically if they default, if the company defaults, VIL, which is basically Richard Branson's holding company, the parent company that is infusing this $5 million of cash, is entitled to, among other things, foreclose on the assets that are subject of the security interest. So they can foreclose on basically any of these assets and just take them if they need to, if they're not getting their money back, basically, or if Virgin Orbit isn't completing its obligations. So that is quite a stipulation to have on just a $5 million investment, right? Like that's pretty serious here. And it's not something you would really include, I don't think, if you're really confident in the long-term health of the company you're investing in. You don't have to include a special little paragraph saying, no, we get first dibs on all your stuff if you guys go out of business. But continuing on, so previously, on November 4th, 2022, Richard Branson and his holding company bought another convertible note for $25 million, basically investing $25 million in the company. Later on, December 19th, 2022, another $20 million. And then once again, January 30th, 2022, $10 million. So these investments are getting smaller and smaller. We got 25, 20, 10. And this company is not getting closer to profitability. If anything, they're getting further and further away and in worse financial straits. So why is the investments getting lower and lower? But even beyond that, this $5 million deal that they made, they agreed to amend all the existing notes. So these are notes we just went over, which come to about $55 million plus the five that they just invested for a total of $60 million. They basically amended those previous agreements, saying that Richard Branson and his company may also require Virgin Orbit to redeem for cash all or any portion of such existing note applications, blah, blah, blah. Basically, they need to guarantee Richard Branson will get his cash back, his $60 million from all these previous notes, in order to get this extra $5 million. So it doesn't look good for me. And frankly, if this is what it is, I'm really disappointed and angry with Richard Branson, because I mean, think about it. You founded this company, you've been selling it as this amazing technology, it's going to be great. You're trying to convince retail people to invest in your company, people that may not have that much money, may not be in a great financial situation themselves. They're investing in your company. The company's failing. You're a billionaire. These people, your investors, your retail shareholders may have put, all their savings into it for all you know. And you're saying, no, I need to get my $60 million out of this company first before all those retail shareholders. Even though I'm a part of the company, I could be part of the reason it's failing. I'm a billionaire. I need my money first. That really sits not well with me. So if this is what happens and I'm going to be watching this, I'll be very upset with Sir Richard Branson, and definitely not a fan of any of his other endeavors either. So definitely going to be watching this closely, but a lot of things in this SEC filing to raise our eyebrows at. And even if you want confirmation that I'm kind of reading this right, we do have a tweet here from Eric Berger. He's a highly respected journalist in the space industry, also wrote a book on the early founding of SpaceX, and basically just mentioned, yeah, this is weird. Richard Branson invested another $5 million into the company, but amended the previous agreements, allowing him to pull all of his $60 million out of the company at any time. Not normal, I'm told. And again, I'm not a legal expert, so I don't know how normal all these things are, but it sounds sketchy to me, right? We have a reply here from Eager Space, who I don't know, by the way, but he says, this is heading to court. It's simply not allowed for a company that is going into bankruptcy to make deals that gives preferential treatment to one creditor over the others. And Eric agrees with that. So he thinks maybe someone might be able to fight this in court, saying that, no, Richard, you're a billionaire, maybe this 60 million should go to some people who need it a bit more, who are also creditors of the company. So clearly Eric thinks this one's headed to bankruptcy, and so does Eager Space and some other people. But let's continue on, because I obviously have looked into this further, and we have some more stuff to look at. So financial industry sources said that the issuance of this secured note is a red flag because it will make additional fundraising much more difficult. For the reason, like, why would someone want to invest in Virgin Orbit if all of the company's hard assets are already secured by another creditor? So am I going to invest in a company that's struggling? If it goes under, I know, all those planes, all those valuable assets are already kind of spoken for. Like, it doesn't look good for other investors, and this is a company still burning cash that will still need more money in order to survive in the near future. So I wanted to take a look at the balance sheet of the company to try and get a sense of, how bad is it right now? And is this what's going on with Richard Branson? So we took a look at, these are the quarterly reports for the last 4 quarters. The total current cash and cash equivalents as of the end of Q3, because they still haven't reported Q4 yet. That'll be coming soon, so it'll be interesting to see. But back in November, Q3, they had $71 million cash and cash equivalents to play with, basically. They also do have some net receivables and inventory that you could, potentially sell or might be worth money. So total current assets would go up to $155 million. But on the other end of things, they do have accounts payable, liabilities, deferred revenues. So current liabilities are $72 million, which is actually higher than cash and cash equivalents. So it doesn't sound good either, as well as $44 million in long-term debt. And the total non-current liabilities are sitting at $81 million. So that's a total liabilities of 153, total current assets 155. So you can see not a great situation there, and that doesn't even talk about the burn rate. And by the way, we can see this has been dropping. We had 194 previously, dropped all the way to the next quarter, only down to 127. Obviously, we had a bunch of cash raises, and that kept it pretty flat at 122, and now we have another big drop down to 79. So it'll be really interesting to see what happens in this next quarter. And I think it could be bad. So continuing on to the income statement, just to kind of get an idea of how much money is being burned here. These are quarters. We can see that in Q3, they had a total operating income of negative 50 million. They had a net income at the end of the day of negative 43.5 million. EBITDA is negative 40. That's earnings before interest, depreciation, amortization, negative 40 million. So clearly burning a lot of money here. And the other concerning thing is these numbers aren't really going down that significantly. If you look at the quarter previous to it, it was, they burned less money than this quarter. So it's not like we're really close to break even here. If anything, they're burning more than they did in the last quarter. And you have to think that we just had a failed flight recently, by the way. The first mission from the UK called Start Me Up attempted to launch in January, and it had an anomaly which failed. So not only do they not get the income from this, but you got to think that there's some costs around having a launch. So, the fuel, paying all these people, airports, pilots, like ground support staff and everyone. Surely there are some incremental costs related to launching. And obviously, if you're not making any money from that launch, that can hit the bottom line even harder. So Q4 could also be rough because we didn't have any successful launches. So Q4 results expectations. So there was no successful flights in Q4. The failed flight was likely to have expenses associated with it. Last quarter, they burned over $50 million, and that was without a failed launch attempt. So this quarter, I'm thinking I expect them to burn at least $50 million, probably more if I'm being honest, but let's play it safe and say 50 million, maybe more. How much cash did they have left at the end of Q3? They had $71 million. How much cash did Richard Branson just put in? A measly 5 million, right? So what do we have remaining? Let's say maybe 20 million, best case scenario, is how much cash they have left to continue their operations. How long is that going to last? A company that is burning $50 million per quarter, that's less than half a quarter. So definitely scary situation for Virgin Orbit. And do they have enough money to even do another launch? And even if that launch is successful, that's an only $12 million dent, and that's revenue. That's not all profit, right? So $12 million in revenue coming in for the quarter, probably not enough to break even for sure. They probably, I would think, need at least being generous, maybe 8 to 10 launches to really make money, I have to imagine. So, if they manage to get another launch off, what then? I think they're still in a ton of trouble, right? Q4 results are revealed on March 27th, so I'll be watching this quite closely, as well as the stock movement after the fact. That's definitely going to be a big day for the company. They probably need to announce additional investments beforehand, or things are going to get scary. Investors might run for the door. So, valuation measures. Now the company is only worth $444 million as of Friday, last trading day, whereas when it went public, it used to be worth over $3 billion. Obviously, that means if you were to short it, there's a lot less meat on the bone, if you will, in terms of how much money you could make being on the short end of this thing. Personally, I would be way too scared to invest in this right now to try and take advantage of any kind of a pop. I think their situation is just very scary, and there's really a good chance they go bankrupt, at least in my opinion. Obviously, you never know what could happen. They could have a big investor come in, Richard Branson could maybe open his purse, and instead of giving 5 million, give them 100 million. That would give them, another 2 quarters of runway maybe. But this situation just looks scary to me, and it's not getting better very quickly. Now, I was looking at put options, which is basically a way to play the short side of it. If you want to, you can force someone to buy it at a certain price. So if I purchased $2 puts, my break even would be at about $1.20. Right now it's at $1.34. So I would need the stock to go below $1.20 by April 21st in order to make money. And then beyond that, depending on how far it goes, you could just make more and more money. So if it went way down, then I could potentially do quite well. But if it stayed flat, you would lose your entire investment. So very risky. $1 puts, even riskier. You'd need it to drop to 85 cents per share in order to make money. I don't think I'd do that either. It just... it's hard to time these things. We have that earnings call coming up, which I think could be a negative catalyst, but the market can be irrational. So these short-term trades can be very risky. It's really hard to predict short-term movements, and generally I would like something longer out if possible. So looking at the value of these potential trades, if you put $960 into the $2 puts, that's 12 contracts. If it hit 80 cents, you would make $1,440 return. I think probably not worth the risk, just in case there's some news that comes out and maybe they get a launch off and then the stock pops. You've only got until April 21st. So, anything can happen in that short a timeline. The other potential option to take here is just shorting the shares. How this works is you basically sell shares you don't have. So I could, in my account, go and sell Virgin Orbit shares. I don't actually own any shares, but my brokerage will let me do this. And then I just have like a negative share amount for Virgin Orbit sitting in my account. And I have to pay interest on that while I am in the negative on that company. But at some point, if it drops, I buy it back for a cheaper price, and then obviously I make the difference. But you have to worry about how long you're stuck sitting short on this company and paying those fees along the way. But it's an option. It's something I would seriously consider, because if the company went completely out of business, you just the shares become worthless. So if you have negative 1,000 Virgin Orbit shares on your account, that's worth zero, because the shares are worthless. You don't have to buy them back at all. So there is a potential to make some money on it if the company were to go out of business, but anything can happen. It's very rare I short a company or go short on a company. I've only done it once or twice before. I haven't fully decided what I want to do on this one. Definitely going to think about it some more going forward, but this is just my overview of the status of the company and why I think they're in a ton of trouble. I would be much more inclined to go short than to go long at this point. I don't have a ton of cash free, so I'm not entirely sure if I want to short this versus, just putting more money into Rocket Lab, which is a company that is succeeding, or other companies potentially. So I'll have to decide what I want to do. This is just my kind of thesis around what's going on with Virgin Orbit right now. So what do you think, guys? Is this company going out of business? Are you a shareholder in this company hoping for some kind of a pop? If you are a shareholder, have you looked closely at their finances, or do you just kind of enjoy looking at the technology and stuff like that? Let me know down in the comments below. I'd be very interested to hear both sides of the discussion. If you think it's going out of business, would you consider shorting it? Do you not like to take short positions? Do you have something against that? Open to the conversation for sure. And if you did like this video, please give me a subscribe and a like down below if you haven't already. Thanks for watching, guys. I hope you have a great week, and I'll see you next time. Bye for now.